Hello and welcome to another episode of the Investor Financing Podcast. We have a great show. We're going to talk all about multifamily investing. Please welcome Kent Ritter. He's a former management consultant, startup owner. He's done a lot prior to real estate, so that gives him a very diverse background. He even went to work with a mentor who's got 12,000 plus units, and then he went on his own and he's crushing it. And he's in the Indianapolis market, which is like a really good market. I mean, a lot of my friends are investing there. Just huge job growth. Like a lot of the millennials it just seems to be like a really good place to be. Although now it's probably a little bit more difficult to find opportunities in that segment of Indiana, but it is truly a good market. And so I love the Midwest as well. So welcome to the show. Thanks for joining us.
Yeah, Beau, thanks for having me. Excited to be here today.
So, you had an interesting background. I mean, you're a rather young guy anyways, but very successful in your business ventures. And then you said, well, there's probably a better way. And you thought about real estate. You started doing some fix and flips, and then realized, wait, there's got to be a better way. And then you kind of learned the multifamily business. And then you found this mentor. You actually went and worked for him, probably learned a ton. And then you said, okay, now there's a better way. I can now do this myself. And that's where we're at today.
That's right.
And so kind of walk me back, like when you first got into real estate, you're just kind of high level your journey and like what you're seeing today and what the opportunities look like for you today. Yeah.
So I'll start with the journey. So, like most people, it's kind of a winding path, but like you said, I had a business. I was a management consultant, came out of school, started management consulting, which essentially what that means is we're flying around the country every week, helping businesses solve problems that they couldn't solve themselves, right? That's why they were hiring us. And so it was just a great education in seeing hundreds of different businesses and how they operate and what works and what doesn't, and a lot more than what doesn't, right? Because that's why they were calling us. But just got a really good education on kind of how to run a business and what not to do. And so I think that was a great opportunity to learn there. So you talk about these different, I kind of look at my path as these different learning moments, right? And so that was a great one. Then in 2010, we saw the market shifting on the consulting side of what we were working on, and didn't see the company we were working for going that direction. And so we decided to leave and really pivot and really focus on kind of a specific technology at a specific time. And we created a consulting firm around that. And I mean, some of it was luck, some of it was calling the right move. But we grew that firm from 5 guys to 95 employees and 30 million in annual revenue in about 5 years. And then we sold that company at the end of 2015. And that was really when we were going through that sale process, and it was kind of making me think about, okay, well, like what's next? Because I mean, for those 5-6 years, I'm like heads down, really just running that business. And you start thinking about what's next. So I'm thinking about, well, I need to diversify, right? So first of all, it was about diversifying my investments and not having all my eggs in one basket within the stock market. And so I started looking at different alternate assets and really thought real estate was checking a ton of boxes for me. But cash flow opportunities, good appreciation, a lot of tax savings, and just a non-correlated with the stock market, right? So if the stock market tanked 40%, my real estate wasn't going to do the same thing overnight. So that's what got me interested in real estate, and actually started passively investing with other people in their deals. So I started investing with others just to get real estate exposure. And then as I just started seeing the returns and started educating myself and understanding it more, I said, wow, this is something, one, I think is really, really cool to be able to like take this asset and fix it up and make it something nice and new. But also just recognizing that I felt like there was a big opportunity there. And so I started getting more active into it. And I was still primarily investing with others, but I started getting more active. I had 2 buddies from college, and we started flipping houses together. We built up a small single and duplex portfolio. We had about 11 properties at the end of it all. But really for me, the issue with those was one, just incredibly time intensive, especially the flipping. And two, just the ability to scale. I mean, it's hard to buy a house, and then it's hard to buy 11, and then you start doing the math on how many that I would need to buy to get to kind of where I wanted to be income wise, and like that was a hell of a lot of houses. And so again, like as you said, okay, there's got to be a better way. It's like, well, maybe I can go out and buy 100 units under one roof, right, and do one transaction. And throughout this time, I'm kind of educating myself, learning this, really understanding the benefits of multifamily, and had built a relationship with one of the groups that I had started passively investing with, and the founder became a mentor of mine and was helping me through the process of kind of doing my first deals and trying to get active and find deals in multifamily. And I went out and with some partners, we bought our first deal in 2019, and we syndicated it. We raised money, and I think at that point, my mentor was kind of like, wow, like he really did it. I mean, we bought 250 units in 2 properties. And so I think he saw an opportunity there to say, why don't you come on board with us, and we can form a partnership, and you can grow your brand, but use our infrastructure. So basically the way we set it up was kind of a subsidiary, if you will, focused on a specific strategy and of less than 200 unit properties, because they were only focused on 200 plus unit properties. So I was able to build out a team there, but really use their corporate infrastructure as a launching pad, which was great. And I spent 15 months there, and we had 4 acquisitions. And it was a great learning experience, kind of that next step in my education. I call it like my real estate MBA. And then from there, though, just the entrepreneur in me knew that ultimately I didn't want to work for anybody else. And ultimately I wanted to build my own business. And so sat down with my mentor, and we had a good conversation, and he understood, because he had done the same thing. He's an entrepreneur. But I struck out on my own in June of 2021. And since then, kind of the rest is history. We've acquired about 180 units. We've got another 260 under contract right now since the middle of last year, and we're just kind of off to the races.
Wow, that's a great story. I love how you didn't go pay for a mentorship. You actually like invested passively in this group, and you're like, well, I like this company, and obviously the CEO liked you and kind of took you under his wing, and mm-hmm. You probably couldn't have got better education anywhere, right? Because it's not like a paid training. You're actually ended up getting involved in acquiring properties under that umbrella, which is I haven't heard that story yet. I've heard everybody else is, I had a kind of a guru type of multifamily teacher, and that's how they learned. You actually learned a different way, which is interesting and unique and smart, actually.
I think it is. It was very unique. It was a very unique opportunity, and I was blessed to have the opportunity. I don't think it comes along where people open up their business to you like that very often. And but I think he saw an opportunity, where there was a segment of the market that they just couldn't cover, because just their overhead was too large to go and acquire a 50 unit, for example. It just didn't make sense to them. But we could kind of create a model that worked for both of us. And it was really cool. And I've done a handful of paid programs as well, and paid mentors too. And I think the difference is a lot of those programs leave out kind of the nitty gritty stuff of like, they tell you the high level stuff, but like, all the things that have to happen really to make a transaction close. I mean, there's a lot when you really get into it. And you're actually dealing with the attorneys and dealing with the title company and going through all the objections and all these things. And so I was able to really get a firsthand look at that and have support while kind of being able to get out there on my own through my first, not my first, because we did those 2 deals, 2 properties before, but kind of my next 4 really had that extra support and was able to learn through that. And so, it was a fantastic learning experience.
Yeah. And it seems like in the syndication model, like, it's more of a team sport, and eventually, once you build your balance sheet up, then you have these kind of like junior syndicators that come and say, "Hey, Ken, I got this deal. I need a KP because I can't
mm-hmm.
do that," right? And then you start getting these opportunities from these kind of junior, and that's what I like about the business, that you can really, if you're willing to support the up and comings, right, that might have found a really good deal, but they just can't close on it. Then you can come in and kind of, because a lot of it comes down to having the balance sheet and having the experience to take it down to get like Fannie or Freddie agency type of debt, right?
That's right.
So really, like so how do you how do you structure your deals? Are you doing deals like that where people are coming to you now because you built a name, so forth, and they're like, hey, this is a deal, and will you take a look at it and see if you like it, and potentially co-GP it with me? Is that kind of what you're seeing now as you evolved your business?
Yeah, that's exactly right, and that was how I got started too. On that first deal I talked about, the 250 units in 2019. I really was that person, kind of that new person. And I partnered with, 3 other folks who were more experienced. And so I was able to then learn from them. And I think that's probably the best way to get started is find people that are more experienced that you can learn from and you can add value to. So that was kind of how I got started. Now I am on the other end of that where I've done twice now, had that exact example where it's like a younger group or a younger guy who's brought a deal and they got a good deal and they don't really know how to quite get over the finish line or have the balance sheet to do that. And I'm able to provide kind of the experience and the framework. I give them my playbook and balance sheet and other things to get it over the line. And so it's mutually beneficial. So we're doing deals on our own, but also, a couple of times now we've partnered with others in that way. And it's worked out really well.
And so you really kind of built your business in Indianapolis. I mean, that's obviously a thriving market. And now your thought process of kind of expanding your footprint and where do you see opportunities going forward here in 2022?
Sure. So we've got properties currently in Indianapolis, in Dayton, Ohio, in Cincinnati, in Louisville, and in Lexington. And so we've got kind of a footprint around the Midwest, right? Indiana, Ohio, and Kentucky. And we're continuing to operate in those markets. I think it's important to have some level of geographic diversity. I wouldn't want everything to be in Indianapolis just because, Indianapolis is growing fantastic right now, but you never know what's going to happen, right? So I think it's good to have that diversity. So we're continuing to expand into markets that are kind of like Indianapolis, markets that have relative affordability, markets that have, are business friendly, markets that have good, diverse employment sectors, right? Lots of different types of jobs and different industries. We love markets that have like a major university, like an education component, and we love markets that have seats of government as well, because those are healthcare, education, government. Those are stable, non-cyclical jobs. And so we're expanding throughout the Midwest, throughout Western Ohio, throughout Indiana, and also started to expand down into, we don't have properties yet, but like Eastern Tennessee, and then Northern Georgia, Northern Alabama. As we continue to spread our footprint and as my team gets bigger, we're expanding down into the Southeast area. So I think there's a ton of opportunities there.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Beau, host of the Investor Financing Podcast. I appreciate you checking out our channel. On this podcast, we talk about real estate, investing, financing, business lending, and acquiring and expanding your business. I'm sure you will find some videos here that will help you build your business empire. There's a lot to see. Take your time and make sure you comment, like, and subscribe. Thanks again. So what do you, it sounds like you went to college, obviously, and pretty educated guy, and always kind of had the entrepreneurial bug. Mm-hmm. But what kind of drove you to get such fast results? I mean, was your family entrepreneurial, or was this just kind of like something that you kind of had internally? And what do you do on a daily basis to kind of up your game a little bit? Are you kind of up in the morning at 4 a.m. or what's kind of your rituals?
Yeah, great question. So no, my family is not entrepreneurial at all, and that really was a hurdle that I had to kind of overcome with my own mindset. I grew up very blue collar. My mom was a grade school teacher. My dad worked. He worked kind of good jobs, maybe $50,000, $60,000 a year. But he passed away when I was 14, and so for most of my growing up, my high school years at least, we were kind of living on a single teacher salary. So very, very blue collar, but always had always had that entrepreneurial bug, always knew I wanted more. Even when I remember being a little kid and people would ask me like, what do you want to do? And I'm like, I want to own a business. I didn't know what I wanted to own at that point. I mean, even in college, I didn't know. I knew I wanted to be my own boss. I didn't know what it was yet. It wasn't until I found real estate that I was really like, wow, this is great. And the reason I went into management consulting was really because I saw it as an opportunity, like I said, to see a lot of different businesses, understand how businesses work, understand how to solve problems. And being an entrepreneur, I don't do well like sitting at a desk all day, doing the same thing. I did when I was in college. I did an internship as an accountant because I was a finance and accounting major. And you sat at a desk all day and did journal entries. And oh my God, it was awful. I went back to school and immediately dropped my accounting double major, just a few credit hours short of getting it. But I was like, no, I've done enough. This isn't for me. So I always wanted to be on the move, always have different experiences, right? And always be learning. And so fast forward, I guess what's driven me to have success, I think I've done a great job of surrounding myself with the right people. I think both on my team, I pride myself in being able to build good teams, have a lot of experience in doing that. And then also like from a mentor, like we talked about one of my mentors, but I have several mentors. I also have mentors and I have coaches. I have a life and business coach that I talk to, at least every other week, who it's just like why you have a coach in sports, right? It's to hold you accountable and help you learn and help you avoid, things that maybe they see things coming and they can help you avoid them, right? Or they can help you avoid roadblocks. And so, I've done that, I think, thoughtfully throughout my career, and even going to work for my mentor for a little bit. I knew it wasn't necessarily where I wanted to have another career there. I don't want to be a corporate executive, but I saw it as a great learning opportunity. And I knew at the end of the day, I was going to come out of it knowing more, with a better network, and being better positioned to launch my own thing on the other side. And so I think I've been humble enough to know what I don't know, and humble enough to know that there's a lot I don't even know I don't know, and just try to surround myself with good people, basically, I think is how I've grown. As far as my rituals, so I'm a big believer in rituals, but big believer in just scheduling. Like I have my day is scheduled. Every minute of my day is scheduled. And I think that people, initially, and I initially thought this way of like, oh, that's really restrictive. And that's kind of, God, that seems terrible. Have every minute scheduled, all this. But to me, really, there's freedom in having that organization. And that's the only way that as an entrepreneur, when there's 1,000 different things you can do, that you make sure you're prioritizing the right things. It's about intentionally setting your schedule and setting aside time for those things. I think if you don't do that, you spend all your time in your business on the nitty gritty stuff that comes up and the fires that need to be put out. And you don't spend any time on your business thinking strategically and thinking about partnerships and growing. And that time is the super valuable time that lets you take leaps and bounds. I mean, you could spend all day in your inbox, right? Just answering emails, and you could feel really busy, but I bet you weren't that productive that day. And so I think some of those things are really important. As far as rituals, I mean, I do a lot of yoga. I think as I'm getting older, you start to lose flexibility. And I mean, I'm in my late 30s, I guess you call it now. Yoga helps with that. I'm in great shape. Can still touch my toes, do all those things. It's also great from a mindset standpoint because it's like built-in meditation. But I meditate. My wife and I actually meditate every morning. We're up at 5:30, meditate for about 15 minutes, journal for about another 15 minutes before we get the kids up for school. And those have all been hugely beneficial as I've just gotten busier and busier to kind of stay centered, stay focused, and then I really intentionally, as much as I can, try to carve out like 5 to 8 o'clock at night for family time. It's because I've got 3 small kids. They're 6, 4, and 2. And it'd be really easy to let the business just totally bleed into all of that. But I'm really intentional in trying to take that time because they're only little for a little bit of time. It's crazy how fast it goes. And so, like, for example, I just, there's a guy I've been wanting to meet today and just turned down a happy hour meeting with him because it was going to bleed into that time. And I was like, let's meet next week. Like it won't be the end of the world, but I want to make sure that we get that family time in.
Yeah, I love everything you said because it resonated with me. It's so true about carving out your day and having that kind of discipline where your everything is allocated for. And I always say now that I get older that being disciplined makes your life so much easier. It just having structure and discipline, and you can actually carve out time in your schedule to actually think of, I'm going to take this hour and actually think about how I can grow my business. Leveraging. I like the book Who Not How. That's a new release, a really good book.
Great
and that's
book.
kind of talking about the principles you were just talking about, and that was really good. Kind of closing out our conversation. That's been really good so far. Obviously, we've got rates, inflation. We got all these things. We got wars going on. We've got COVID. But everything still points that there's huge demand for rental properties. There's a huge demand for. There's very low inventory in the single family space. There's high occupancy rates. I mean, how are you kind of like hedging yourself and some of your like mentors that own 12, 13,000 units right now? Have you gotten any feedback about what their take is right now in today's market, and are they still pretty bullish?
Yeah, everybody's pretty bullish on multifamily. I think when you yes, I think it's going to be. I don't know. It's going to be more difficult over the next 5 years than it has been because I think if you look back, I remember going to conferences in probably 2014, 2015, and people are like, "Oh, it's the top of the market. Everybody's got to sell. You got to sell." And I remember 2017 when I really started getting serious and was attending like 10 conferences a year, hearing that you got to sell. It's top of the market. So like nobody has a crystal ball. And the last 5 years have been some of the most lucrative, right, in real estate. And so I think that the interest rates are obviously something that we need to be concerned about. I mean, it's making debt financing more difficult. And I think we're going to see that impact over the next couple of years. I don't think it's a long-term thing. I think it kind of, my personal opinion, and if you look at yield curves, kind of go up and back down. Because I think while inflation is running rampant right now, I mean, it won't forever. And I think a lot of that is still related to supply chain constraints because our supply chains are still really backed up. And, I think predictions I've read have been more about kind of end of this year where we maybe start to see some relief from a supply chain standpoint. But so I think interest rates will come back down over time. I think the next couple of years, though, they really are squeezing things. I mean, when we're doing deals, looking at 10-year fixed debt, I mean, we're getting like a 50% loan to value back. It's just something that doesn't make the economics of the deal work. And so we've moved and changed our strategy, doing more of bridge debt. Whether it's a 2 to 3 year kind of interest only, get us through our value add period where we can create a ton of value, right? And then lock that value in through refinancing is a lot of the strategy that we're using now. I do think that while interest rates will rise, and I think that will likely have some impact on cap rates, I think that the thing that outweighs everything else is the amount of money that's been created in this country, in the world over, through COVID, right? Because we created like the same amount, if not more, through COVID that we did in all of the Great Recession. We did what we did back then in like 3 years and like 3 months, right? And if you look at like the amount of money that's been created over the past, let's say go back to 2008, so past 14 years now, it's something like 70+% of all the money in circulation has been created in that period. So I think what we're seeing is a lot of savings that's still there to be released, a lot of dry powder for, especially like when you think about the firms that really move the needle, like the REITs, the private equity firms, right? A lot of dry powder still to invest. And they're searching for yield and they're searching for some level of certainty. And I think they're finding that in real estate. I think especially in sectors like multifamily and industrial. And so I think that we continue to see prices compress. Maybe it slows down, things flatten out a little bit as interest rates rise to kind of counteract that. But I think that's ultimately going to overweigh what happens in short term from an interest rate standpoint.
Awesome. That was awesome. I liked how you broke that down. Kent, where can people follow you? Where would you suggest sending them?
Yeah, so you can go to my website. It's kentritter.com.
Okay.
And check me out there. You can also check out my podcast, which is Ritter on Real Estate. It's everywhere you listen to podcasts, right next to Beau's up there. And yeah, those are the best places to find me. I mean, also just very active on social. You can find me on LinkedIn, Kent Ritter. And yeah, but I'd say the website's a great place for people to start.
All right. Well, thanks so much, Kent. This was a great conversation. I hope you all will enjoy this in the future when it's edited, and continue to watch our videos and follow Kent, and he'll provide more nuggets in the future for you. And I really appreciate your time that you spent with us this morning, and look forward to connecting with you again in the future.
Absolutely. Thanks, Beau.
All right.